So, what are the remortgage options right now? There's a lot changing at the moment. There's a lot in the press about what's going on. So, I thought it'd be a good time to find out exactly what's going on for you. So, let's get into it. Hey everyone, welcome back to the channel. My name's Adam, I'm an expert mortgage broker. Today we are talking about remortgaging and all the different options that are available and what we need to think about this year because a lot's changed. There's a lot in the media, there's a lot in the press about rates and things, the Bank of England. It's all a bit of a mess. So I'm going to break down exactly what is best for you at the moment. And today's episode is going to look a little bit different because it's actually also going to be a podcast. So I'm joined by the lovely Tessa from the people who actually create our website, and they help us think about what content and things to make each and every week and each and every month, the things that you guys are asking on Google. So if there's anything else that you want to know that we're not covering today, drop us a comment and I'll be sure to do a video about it next time.
Great to chat with you, Adam. How's it all going?
Hi, Tessa. Yeah, it's going okay, thank you. So, yeah, it's a sunny day today where we are, middle of summer. So, yeah, can't complain too much right now. Although I've just seen some mortgage rates this morning, and that's made me quiver a little bit.
Yeah, okay. Well, hopefully, we're going to be able to help a few people out on the episode with the questions that we've got here. And just to confirm, we are recording this episode in July 2023. So let's get straight into it then, Adam. So the first question asks, my mortgage deal is coming to an end. What should I do?
Okay, so the key thing for everyone right now is whatever you do, it needs to be as early as possible. So I've been telling everyone for a long time now, if your mortgage is coming to an end any time in the next kind of 7 months, it's now is the time to start thinking about it because you can choose a new mortgage deal up to 6 months in advance. Any new mortgage offer, really mainstream mortgage offer, is going to last 6 months. So that means if we choose one now and we get a mortgage offer, that mortgage offer is going to last for 6 months. And so you can kind of sit back safe in the knowledge that no matter what happens to interest rates between now and your mortgage end date, your new rate is sorted. Now, some people get a bit worried about doing that so early. What if rates go down? Well, probably unlikely. But if rates do go down, all lenders will let us choose a new deal. So just because we've got one lined up now, all ready to go, doesn't mean that that's exactly what's going to happen. If rates come back down, we can keep an eye on things and we can change it again. We kind of went off the board a little bit with this a few months ago. So a few months ago, actually, rates were starting to come back down, and we were seeing some good rates again. We got below 4% for certain cases. So rates were coming down, and as rates were coming down, we were thinking, well, we don't need to do this 6 months in advance because we're going to be redoing it 3 or 4 times before you actually get to the end of your mortgage. But then things started to change again quite quickly and quite dramatically, actually. So over the last few weeks and last couple of months, interest rates have been going up quite swiftly. So that advice has come back now. We need to do it as soon as possible because if rates go up even more, you'll be safe in the knowledge that you've already got yours sorted.
Okay, so something to definitely bear in mind there. And I suppose this next question follows on really. Is now a good time to remortgage?
Well, yes and no. No, because rates are rubbish at the moment, aren't they? We're
Mm.
we're 6% there or thereabouts for most people, even a little bit more. So whilst it's not ideal, it's nothing like what we're used to. So, now's a painful time to remortgage, and I think what I'm finding is people are putting it off, even though we keep saying do it as early as possible. People are putting it off because it's such a jump in rate from what they've been on. They've come off a 2% fixed rate, or even lower than that, onto 6.5%. That's one hell of a shock. So it's not an ideal time in that sense, but now is the perfect time to remortgage because you need to do it as soon as possible. If you're due any time in the next 7 months, you've got to do it now because if rates go up another percent and we're looking at 7% instead of 6, you're going to wish you did it now. That's for sure.
Right. Okay, then. And how quickly can you remortgage? Is it a quick process?
It can be. It depends a little bit on your situation. So, if you've got some complex needs and complex property or income or credit score and things, it can take a little bit longer because we might have to go to a slightly more specialist lender. But if you're kind of fairly, I was going to say normal there, who's normal? But if you're fairly kind of average mortgage, no complications necessarily, fairly sort of clean credit history, it doesn't actually take long to do the actual mortgage application. So, we'd normally allow a couple of weeks to get a mortgage agreed, and then we could normally complete a remortgage within about 4 or 5 weeks. However, we're looking at much longer time than that, as I've said a couple of times, and I keep saying this because it's really important. So I keep banging on about doing it as early as you can, but it can be done really quickly. So it doesn't have to take long, and it certainly doesn't take long to get the initial mortgage agreed. Then it just sits there waiting for your end date. So yeah, the initial application doesn't take long at all.
Okay, so that's good news. Preparation is key, isn't it? I think.
Preparation is definitely key. Yeah, 6 months. 6 months. People will remember 6 months.
There we go. Remember that. That's a key point. So, people would also like to know then, if my mortgage isn't coming to an end, can I remortgage before my deal ends?
Yes, you can, but would you want to? I don't know. It depends on your circumstances because if you are sometimes, we've had people where this has been the best thing to do. If they want to borrow extra money and their existing lender won't, maybe, or we help quite a lot of people repay that help to buy loans, and that can be done whenever. So certain cases where they are, but what you've got to remember is you're going to come away from your existing deal, which is probably lower than your new mortgage. So you're going to come away from a rate which might be 2 or 3%, go on to one which might be 6 or 7%. Well, not seven maybe, but is going to be higher. So that's the first thing. You're swapping from a lower mortgage to a higher one, but you've also got to pay for the privilege of doing that because your existing lender is going to charge you a penalty, an early repayment charge. So that penalty is going to be anywhere from some sort of 1 to 5% of your loan amount. So that could end up being a good few £1,000s. So if you're paying a few £1,000s to finish your existing mortgage deal early, and then you're swapping on to another deal that's higher, you're paying twice. You're paying, both parts of that to swap. So it's quite unlikely at the moment that that's the best thing, unless you've got other kind of needs in the background. So we have helped people recently where they've kind of needed to do some home improvements, an extension maybe. House isn't big enough, don't want to move, but we want to do an extension. Existing lender won't help. So it's not affordable, or for whatever reason, the existing lender won't do it. So we've had to swap mortgage lenders. There is another option in there, which is probably for a subject for another day. That might be a second charge, like a second mortgage. So that's another option as well that saves paying off the current lender, but it comes with its own higher rate and its own fees as well. So it's a whole other subject, really, that one. But that could be an option. But if we're just moving lenders for the sake of it, it's probably not what I would necessarily want to do given the choice right now.
Okay, so again, something to bear in
Yeah.
mind. Uh, and now, another question asks, can I move to a new rate when my current mortgage deal ends?
Yes, that is absolutely what we do. That is what I spend my life telling people that they should be doing. Um, Automatically, when you finish your current deal, let's say you're on a fixed rate now, automatically when that finishes, you're going to go on to what we call the lender's standard variable rate. And that's normally higher. That's normally higher than all their other rates. It's their kind of fully flexible rate. You can pay it all off without a penalty. You can overpay. You can come and go as you please. But the standard variable rate is going to be higher. So that's what you do automatically. If you don't do anything with it, that's what you do. Now, a lender assumes that a certain percentage of their people will do that, and that's quite profitable for the lender because it's a nice high rate. But what most people do, and what all of our customers do, what we're trying to get everyone to do, is get a new deal lined up early. 6 months, remember? So we're going to line up that new deal so that when you finish your current ones, let's say you finish your current fixed rate, you straight away go on to a new fixed rate with either the same lender or a new lender. Normally it's best with a new lender. So you normally get a slightly better deal as a new customer. Not always, depends on the lender, but that's tends to be the most common thing. So we line that new deal up for you. So as soon as your current one finishes, you don't spend any time on that lender's higher variable rate, and you swap straight away onto a new one. And that is absolutely the best thing to do. That's what everyone should do. Never ever spend any time on your variable rate unless you're like moving. Sometimes if you're moving and there's a month or two between, maybe that's kind of the only reason why you'd ever do that.
Okay, there we go. Now, can I extend my mortgage term?
So there's some media coverage at the moment about the new mortgage charter from the government that covers this. So some lenders would already let you do that anyway. It all depends on how old you are and how long your mortgage is, and kind of when your retirement is planned for. Most lenders have a set age at which they will kind of cut off, so that's their maximum age, and that's normally 70, 75. Depends what you do for a living as well. If you're a scaffolder, for example, dangerous jobs are available, of course, but if you have that kind of job, it's unlikely that a lender is going to kind of believe that you're going to work to 80, because it's a very physical job. If you're like me and you sit on your bum all day talking to people, I probably could. So it depends what you do for a living as to how long the lender will go. But the new kind of government guidelines, the mortgage charter, that does encourage lenders to be a little bit more forgiving on things like changing the term to help people spread out their mortgage and lower their monthly costs a little bit. Also changing to interest only as well. It's a different subject. But there are things that the government has encouraged lenders to be a little bit more flexible on, so that if people are struggling, that is an option. So it does depend on the lender. It depends what you do, and it depends how old you are. So lots of variables there. But yes, potentially you can increase the term of your mortgage. You can certainly do that easily when you remortgage to a new lender. If you are kind of midway through your fix and you just want to do it, it's a little bit more tricky.
Right, okay. Now, I've got two questions in one for you here.
Okay.
So, can I fix my mortgage with rates increasing? And
Yes.
how long should I fix my mortgage
Oh,
for?
okay. Can you fix?
Mhm.
Yes, definitely. There are copious amounts of fixed rates available. That's the most common thing to do. We did go through a phase of doing some Bank of England base rate trackers a little while ago when it looked like things had leveled off. That's got less popular now. That's kind of the other main alternative to a fixed rate. But yes, there are lots and lots of fixed rates available. Every lender has a fixed rate. If you're on one now, you'll be able to go on to another one. Even if it's with the same lender, you'll be able to go on to another fixed rate when yours ends. What was the second part of the question?
How long should I
How
fix
long?
my
Oh, yeah,
mortgage
sorry.
for?
How long? Well, I don't know at the moment. No one does. The thing is, um, how long should we fix for? There's a couple of choices. So we can fix for a couple of years. That's the kind of the shortest term that most lenders will do. 2 years fixed. Um, the other most common one is a 5-year fix. There's a 3-year as well, but it's a bit sort of no man's land, really. Um, so if you fix for 5 years at the moment, you're going to pay a slightly lower rate than you will for 2 years. Slightly more expensive to fix for 2 years. But most people kind of think, popular opinion is, we don't know this for sure, obviously, but popular opinion is that rates will start to come down in the future. So in a year or two, rates will hopefully be a little bit lower than they are right now. That's no guarantee. Please don't, come to me in 2 years and say you said rates would come down. I don't know that they will, but that's kind of popular opinion. So most people kind of think that's going to happen. So if that happens, a 5-year probably isn't the best thing, because you're then fixed in for another 3 years. And if rates have dropped down, you've got that penalty that we talked about earlier to get out of it, to then swap on to another shorter deal. So that's going to be a problem if you fix for 5 years. If you fix for 2 and rates come down, then you can make the most of that. But will rates come down? Will they come down that much? Will it be in 2 years or 5 years? I don't know. No one can answer this question for you. It is completely no advisor. I don't know what's going to happen any more than anyone else. So no advisor can ever say, yes, you should absolutely do this because this is what's going to happen in the future. Be very rich if I could predict that. So that is completely personal decision. Some people, they just want to know what their payments are going to be for 5 years, because 5 years is quite a long time, and that is fine. Doesn't matter whether it comes down or not. They're just happy that they know what's going to happen, and that is fine. But some people want to kind of make the most of rates coming down if they come down. Does that make sense?
It definitely does. And actually, it leads us nicely into the next question. Again, you can't say an awful lot, but will mortgage rates go down in 2023? We haven't got a crystal ball, have we?
Now, someone asked me this, and I think I even did a video about this at the start of 23 when it looked like they were coming down. I said, yeah, it's all good now. Rates are coming down. We're on the way down. And then the last couple of months happened. And yeah, I regret saying that. I don't think they will, to be honest. No, I think we're probably set like this. Hopefully, they're going to level out and not go up much more. Obviously, I don't know this any more than anyone else does, but hopefully we're kind of roughly at the peak. The Bank of England, where are we now? We're sort of middle of July. We're already expecting the Bank of England is going to go up a little bit more. That doesn't necessarily mean that mortgage rates will. They're kind of linked to the rest of the economy. And if you're any regular viewers of the channel know that I talk a lot about swap rates, and actually the Bank of England doesn't necessarily dictate what mortgage fixed rates are. They're linked to other things and the economy. So just because the Bank of England goes up 0.25% in August, if it does, doesn't mean that all mortgage rates will do the same thing. And in fact, we saw the Bank of England go up at the start of July, but most mortgage lenders had already predicted that, and everything had already happened. Rates had already gone up. So just then the Bank of England went up. Mortgage rates didn't really do much after that because they'd already done it. So lenders know what's happening, before the Bank of England actually sit down and make a decision. So, yeah, I'm rambling now. I've forgotten what the actual question was. But just because the Bank of England goes up doesn't mean rates will. But I think, will rates go up? Hopefully not, but who knows? Sorry, that's really
There we go.
vague answer,
No,
isn't
it's
it?
okay. It's kind of like a watch this space, isn't
It
it?
is a little
It's a
bit, yeah.
difficult one to predict, definitely. So we've got a few questions left now. So can I remortgage with credit card debt?
Yes, absolutely. We do this all the time for people. So, if you've got some credit card debt, well, okay, so it depends what you want to do with that credit card debt. Just having the debt doesn't mean that you can't do anything with your mortgage. And so it depends if it's affordable. So, if you've got debt in the background, no matter what it is, loans or credit cards, your new mortgage application, if we're moving lenders, if you're staying with, sorry, I keep going off track. If you're staying with the same lender, it doesn't matter because there's no real questions asked. If you're not making any changes, no questions asked about income and outgoings and things. As long as the mortgage is up to date, you can just change it. If you're swapping lenders, if your credit cards and loans are just going to stay in place, then it needs to be affordable with the new lender. So they'll factor in your income and outgoings to make sure that you can afford the new mortgage. If you want to pay off those credit cards, that's something we call debt consolidation. This is a whole subject that we could talk for hours about. But that'd be boring, wouldn't it, if we talk for hours about that? But yeah, it is a whole different subject, or can be. So there's videos on the channel about this specifically. But if we are paying off the credit cards, we need to be careful of a few things. We need to make sure we don't pay off any 0% credit cards, because why would you pay off a 0% credit card, add it onto your mortgage at 6%? That you just wouldn't. You shouldn't be doing that. If they're also small credit cards as well, a few £100s, you shouldn't really be adding that onto your mortgage. Really, we should be sort of just trying to get those paid off. But it's quite feasible to think, if your credit cards, high interest rate, because credit cards can be high interest rates now. And if you're just about managing to make the minimum payment on your credit card and you can't pay any extra, you're going to have that credit card a long time. It's going to take you a long time to pay off that credit card. So what a lot of people like to do is add that onto your mortgage. It's called debt consolidation. We add that onto your mortgage and it makes one neat new payment. And so what we often find is that because that's going to be on a lower rate even now than your credit card, you can, even without increasing your mortgage term, because you're spreading it out over a long time, your monthly payments for everything, all of your outgoings, can suddenly drop down. And what we try and encourage people to do is say, well, if you're used to spending £1,200 a month on your mortgage and your credit card and your loans, but we're paying all that off, and now your new payment's going to be £800 a month. Well, that extra £400, if you can overpay that because you're used to paying it, if you can overpay it, then you're going to reduce your mortgage balance even quicker. And you'll be glad of that in a few years' time. But even if you can't do that, and with the cost of living and everything going up right now, we've seen more and more of this coming through, doing more of these kind of applications. We can pay off your loans and credit cards, add them onto your mortgage, and then your mortgage payment in total is more manageable than everything before. And hopefully in the future we can start, if interest rates do come back down again, we can overpay and things. But it gives people the chance to get kind of a clean slate, and wipe some of the debt out. You have to be careful about saying that. Actually wipe some of the debt out. It doesn't get rid of it. This isn't an IVA or a debt management plan. For goodness sake, don't do any of those things. Always speak to a mortgage broker first, because there's always going to be a way. If anyone's thinking about that kind of thing, please don't, because that affects your credit score for years to come. Again, a whole other subject as well. But yeah, you can add all sorts of things onto your mortgage for all sorts of reasons.
Okay, well, hopefully that sounds reassuring to anybody listening to this, watching this. Yeah, great sort of breakdown there. Now, can you remortgage a help to buy loan?
Yes, absolutely. So we've got a whole section on this coming, and I've done loads of videos on this as well. This is one of our most popular subjects on our YouTube channel. Yes, you can remortgage, you change lenders, borrow enough to pay off Help to Buy is one of our favourite things to do, because Help to Buy, often when you do Help to Buy, you go to the builder and they kind of advertise it as like free money, don't they? Yeah, don't worry about paying it back. Help to Buy is great. Don't worry about how much you've got to pay back. Well, actually, you borrow 20% of the property's value. You've got to repay 20% of the property's value. And so many people that we speak to don't realize that. And it's a big kind of misconception. I think, well, I borrowed £80,000. That's how much I've got to pay back. Well, no, actually, your house has gone up £50,000 in value. Now you've got to pay an extra 10 grand back, because you've still got to pay off 20%. So we do this for people all the time. We get two valuations, one for Help to Buy, one for the new lender. They don't have to be the same. That's a big sort of hack, as it were, for paying off Help to Buy. And then, so we go to the new lender, we borrow more. If you've got some cash to put in as well, that's great. But if not, it's not a problem. Hopefully, after 5 years or so, we've got enough equity in the property to enable us to borrow more from the new lender, pay off Help to Buy, so that it's just your mortgage. And that is a great position to be in. I took Help to Buy myself a few years ago. We did this exact same process to repay it. And now, knowing that, we're just repaying a mortgage, and it'll be ours in however many years' time, long time, but however many years' time, that's pretty comforting. Not to know that this Help to Buy isn't accumulating in the background, because that's kind of what it does. Not many people know that.
Okay, brilliant. Well, there we go. A great example from yourself there. Now, I think you've already nicely demonstrated how a mortgage broker can help here, but is there anything else we need to know, Adam?
Well, a mortgage broker has access to so many things that you don't as a consumer. You can go on Compare the Meerkat or whatever, can't you? And Money Supermarket, other websites are available, of course, but you can go on those sites and plumb in some basic details, and it will say, oh yes, this lender's got the best rate. But that doesn't tell you whether that lender will actually lend to you, or whether they'll lend on your property, or whether they're going to fit your circumstances, or what income of yours they're going to take if your income's complicated. It also doesn't tell you about the good few lenders that don't advertise on those platforms, because they're intermediary only lenders. There's a few lenders that don't lend directly to the public. You have to go through an intermediary. You've got to remember that mortgage brokers do, depends on who you ask, but 75 to 85% of all mortgages in the UK. So they make up a massive share of the market. So all the lenders, they get most of their business from intermediaries, from brokers. So if anyone's going to have a better chance of getting you the better rate or the better deal, or being able to help you with different circumstances, it's a mortgage broker rather than a Meerkat. Okay, everyone, so thanks for watching. That was a little bit about remortgaging currently. Now, if you'd like to know a little bit more about your own situation, there's a link in the description to go onto our website and find out a little bit more about us. There's also a link in the description to book a call straight in my diary. You can do that anytime. Speak to me or one of our other mortgage experts. So hopefully we'll speak to you very soon. If not, I'll see you on the next video. Take care.